So as traders, we have the job where we have to wear multiple hats. We have to be a scientist, an analyst, and a strategist. We have to integrate these skills, as you see with the team here, so that we can devise an objective methodology, apply the methodology to produce technical evidence, and then convert that analysis into a trading plan. There are no certainties. However, your methodology should put the odds of your trading plan in your favor, and then you have your money management rules to control your risk. So as Slim and Arby mentioned, I'm going to do a segment here on Apple. I have up here the core trade planning questions that we like to look at. You're going to be able to define your outlook period, the directional bias, your key levels, including reevaluating where things have changed. And then you need to be able to determine, once you've completed that process, that's some of the evidence. Do I have a clear tradable edge? And then from there, what are the signals that you need to see so that your trade setup is a go? All right, so as we look at Apple here, and we look at where this cycle completed, it actually was a overall bullish condition, a positive condition, where we had the close of the cycle really only coming into about the 38.2% retracement level from this prior cycle low to where this corrective phase ended. And coming into this next cycle, you would then expect, if you had a positive overall condition, positive cycle structure, that once that momentum turned back up, there was a higher probability that we would retest or break out above that prior high. That's exactly what Apple did in this rising phase. But then it ran into trouble. And when that gap down occurred in the beginning of the year, that momentum on the weekly shifted negative. And since then, it has really traced out some lower lows over the weekly periods. And that has affected on the weekly chart here, the overall minor cycle structure, turning that negative. So that's the picture on the weekly, but really it's where, when we get into the daily chart, where the additional details emerge for solidifying the trading plan. And as Slim mentioned, and as you see with RV and Katie, it's very important that you have this multiple time frame ability to look at the analysis so those details can emerge. So I'm looking at the daily chart here. And when we came into the January period, we set a cycle low, and we had a decent rally off of that low in that rising phase, actually making a couple of prints above that 78.6, but then things turned negative rather quickly. And we actually had a violation of the prior cycle low. We had a test of that cycle low here in mid-January, and then we actually broke it here in early February. This then shifted this pattern structure negative and suggested that we had a left-hand translation that had occurred, and that the rallies were likely to struggle, and that now that we're into the late peaking and declining phases, the risks pick up. So you have time against you if you're a bull, and time with you if you're a bear. And you also have, right now, based on the price action, you have the trend a negative. So that cycle structure is negative. So now what we're looking at here is over the next, I have an intermediate outlook, it's probably the next 2 to 4 weeks or so. So typically the intermediate outlook is 3 to 8, our short term is 1 to 3. So it's right on the tail end of that short term, getting into that intermediate, where the projection zone comes here right around 177.60 to 173.92, based on some swing high, swing low analysis that I performed. And right now I have a couple of reevaluation levels to pay attention to that would suggest that I have to review the analysis. The first is a close above 190 would force me to reevaluate that downside projection. And then the repair of the overall negative condition would occur with a push above 192.80. So that is the review of Apple at this time. And finally, I wanted to say about what are the signals that would suggest that a trade is a go. I think that's always important to look at. And that would be, one of the examples here is the Slim Ribbon PO, which fired a negative continuation signal here on February 13th, suggesting that this rally attempt, while maintaining that negative momentum, was that rally is likely failing, and the continuation of the more dominant negative momentum was beginning again. And that's what you saw here as we've continued now lower. And now as I pull over a multiple time frame grid here, this is really what it takes to get a good sense of other potential signals that suggest the trade is it go in that direction that you're looking for? And you can see here that the slim ribbon turned negative. This was on 212. So these, I'm just trying to provide some examples of shorter duration timeframes that help with making those entry decisions. And then even on the 15-minute here, if I saw the slim ribbon return back to negative, that would suggest that a continuation on that downside was likely in motion.